Forex versus crypto. Which is riskier? In 2026, the answer isn't as simple as it used to be. Today, we're breaking it down for every trader. We're analyzing the structural, regulatory, and operational hazards facing every trader in this new digital economy. The primary distinction lies in the scale and the anchor of value. Forex is a fiat-based system, while crypto is a nascent blockchain-driven frontier. One is driven by macro data, the other by narrative and sentiment. Let's start with volatility. The biggest risk for most. Crypto volatility is statistically 3 to 5 times higher than Forex. Major currency pairs like EUR/USD typically move 0.5% daily, but major cryptos regularly experience swings of 5 to 15%. Then there's the liquidity floor. Forex is a massive financial colossus. It sees daily spot volumes of only $150 billion. This liquidity pool allows for near zero slippage, even for large orders. In crypto, whale moves can cause immediate price spikes or crashes. Now, let's look at leverage. It's a double-edged sword for all traders, but the mechanics differ significantly due to strict global regulations. In major jurisdictions, retail Forex leverage is strictly capped at 1 to 30. This regulated environment is designed to protect you from instant ruin. Unregulated crypto exchanges often offer over 1 to 100 leverage. A 1% move against you can result in a total loss of margin. Standard Forex position sizing is catastrophically dangerous in crypto. You must limit your risk per trade to survive the extreme swings. Also, watch out for funding rates. They can be incredibly costly. Holding long positions in high-demand markets can bleed away your capital. Contrast that with Forex, where you might get paid through positive carry. Interest rate differentials can work in your favor while you wait. Now for the biggest non-market risk, regulation and custody in 2026. This is where the landscape has shifted most for digital asset traders. Forex operates under a mature framework with segregated client funds. Your balance is often insured, making custody risk practically zero. But in crypto, security risks are live. Hacks drain billions annually. Breaches in centralized services are a constant threat to your capital. Traders must choose between exchange risk and self-custody risk. Lose your private keys and your funds are gone forever. Be careful. Let's not forget the psychological toll of the 24/7 market. Crypto never sleeps, which significantly increases the risk of burnout. Forex follows a weekday cycle, giving you a vital cool-down period, but watch for weekend gaps that can bypass your stop-loss orders. Crypto's continuous pricing reduces gaps, but leads to thin liquidity. Weekend spikes can be erratic when institutional desks are offline. In 2026, the pros are using a multi-asset strategy to manage risk. Interestingly, by late 2025, Bitcoin's volatility dropped to a record low of 2.24%. This was lower than Nvidia stock during the same period, suggesting institutional capital via ETFs is stabilizing blue-chip assets. But don't be fooled. While Bitcoin stabilizes, the risk gap for altcoins remains extreme and unpredictable. The MiCA framework has improved transparency, but regulatory gaps still exist in many jurisdictions. Always check where your exchange is licensed. A license in one region doesn't guarantee safety in another. Mental mastery is your biggest edge. In a 24/7 market, knowing when not to trade is vital. Develop a routine. Set alerts. Don't let the market dictate your peace of mind or your sleep schedule. Looking toward 2027, the line between traditional and digital finance will continue to blur. Prepare now. They combine Forex efficiency with crypto's high beta growth potential. For beginners, Forex remains the safer entry point due to its structure. Master the fundamentals there before diving into the crypto deep end. Education is your best defense against loss in any market landscape. At Salvanta Media, we're here to help you navigate these digital waters. Join our community of hustlers who are building wealth in 2026. Subscribe now and stay ahead of the curve with our daily tech insights. Trade smart, stay safe, and I'll see you in the next video. Let's make this your most profitable year yet. See you soon.